What's up, everyone? This is Silver Slayer, and welcome to your daily silver stacking video. Thank you for tuning in. And if you want the newest, latest, freshest, most up-to-date recent information in the world of precious metals, then make sure you are subscribed. I'm going to keep you updated on a daily basis, always keeping you in the loop. Now, this article in particular is very interesting, talking about how gold and silver both draining the COMEX inventory. And if you want to talk about a lot of silver getting thrown out, you also want to be subscribed because I'm doing a massive 50,000 subscriber giveaway. A lot of silver going to be thrown out to a lot of different stackers. It could be you, so make sure you click that button. Now, the link to this article will be in the description. It shows the numbers. It shows a lot of context. Numbers don't lie, ladies and gentlemen. This is going to explain a lot. We're going to be going over some very important stuff here, and it's pretty mind-blowing. It's pretty shocking when you look at these current trends, comparing it to the last couple of years and just really seeing how much silver is being bought on the COMEX. I think people are finally understanding that $22.54 for an ounce of silver is an absolute steal. Nobody can argue that. Nobody can debate that. So anyways, let's jump into this article. This analysis focuses on gold and silver within the COMEX and the futures exchange. Now, the charts and tables below specifically analyze the physical stock data at the COMEX to show the physical movement of metal in and out of COMEX vaults. Now, we all know that there's not enough physical silver to cover the contracts on the COMEX. If everyone on the COMEX wanted to turn their contract in for physical delivery, there would not be enough. Every ounce of silver that you own in your safe or under your bed in your shoebox or in that safety deposit box or even 2 feet under the ground in your backyard, every one of those ounces of silver, theoretically, 100 other people own, but digitally. And that's why I always say, if you can't hold it, you don't own it. So anyways, registered equals ready for delivery, and eligible equals warrant assigned, but can be made available for delivery. Now, most people on the COMEX, they don't turn their contracts in for physical delivery, and that's why this model can work, and that's why it has been working. So over 1 million ounces of gold left the COMEX vaults since August 1st. This continues the current trend that has been in place since March 2021 of metal draining from the COMEX. The same has occurred in silver as well. While July and August saw some inventory added, the drainage has begun in September. Specifically registered silver available for delivery declined by 5.5 million ounces. Registered may have increased by 3.7 million ounces since September 1st, but that is really people taking ownership of the bars and leaving them at the COMEX. So I'm really curious to see how much they have in stock. It always goes back to the thought of in 1980 when the Hunt brothers cornered the market, owned up to, some sources say, 77% of the global silver supply. And that was because they owned almost all the silver on the COMEX, the SOB. And what they did was try to turn it all in for physical delivery. But there wasn't enough. So you know what the government did? They banned silver. Silver Rule 7. They made a law on the spot that you could not buy silver anymore. All you could do was sell it because the government only had enough silver to cover 1 month on the futures or on the COMEX, the month of October. That's how much physical silver they had left. So they had to take drastic measures. But it also it comes back to nowadays because you have people like Wall Street Silver trying to corner the market in some sort of way that the Hunt brothers did, buy up all the physical silver, pushing or forcing the price upwards. Now, I already made a video a couple weeks ago, maybe about a month and a half ago. Someone tried to turn in their contract for physical delivery and got rejected, denied. Will we see that more and more? We know that they need silver for solar panels for electric vehicles. But what if there's not enough silver for those solar panels or electric vehicles or the newest, latest iPhone? What would they do? Obviously, the price of silver would skyrocket, but have you ever thought about the aftermath? Yeah, we cash out or whatever, our silver is $100 an ounce, $500 an ounce, but we still have to think about what would happen if there isn't enough silver, right? So anyways, here is the month to month change in stock. So ounces of silver. So we go from March 2020 when silver was $11, and then we go all the way to September of 2021. Now, the blue is registered, which remember up here shows the amount that is ready for delivery, and the eligible is a warrant assigned but can be made available, which is the green. So you can see it's very, very short right now. When silver was $11 an ounce, you saw massive, we're talking about almost 12 million ounces. 12 million ounces. But now down here, it's negative 0.2. The same has occurred in silver as well. While July and August saw some inventory added, the drainage has begun in September. Specifically, registered silver available for delivery declined by 5.5 million ounces. Registered may have increased by 3.7 million ounces since September 1st, but that is really people taking ownership, leaving them at the COMEX. And that doesn't seem like a lot of silver, right? We're talking about around 900 million ounces of silver demand per year. 900 million ounces, almost a billion. It's actually a couple of years ago, I'm pretty sure it did hit a billion ounces of demand. And that graph, that number is only going to keep growing over the next couple of decades, or actually from here on out, right? If you think about 30 years from now, 40 years from now, think about a sci-fi movie, flying cars, all these digital buildings that have all these skyscrapers, and that's all going to require silver, and nothing can replace silver. So if there's already a silver shortage, if the U.S. Mint is already having a hard time filling 13 million ounces of American Eagles, then what in the world are they going to do moving forwards? They're going to have to find a new source of silver, whether it's space mining, whether it's taking our silver, right, forcing the price up, so they're almost putting us in a situation where we have to sell, learn how to mine silver out of the ground better. Something has to change, because there just simply isn't enough to keep this idea going forwards. In the last month, the COMEX lost 1 million ounces of gold, which is 33% of the total over the last 12 months. This means the trend is accelerating. The latest week saw a slowdown of only 31,000 ounces, so it will be interesting to see if it picks back up. Silver, in the last week, saw a whopping 1.2 million ounces leave the COMEX vaults and nearly 3.8 million leave registered. Both of these figures represent about a 10% of the total over the last 52 weeks. As figure 2 above shows, the drainage of silver was strong from February to June. The recent activity may demonstrate the drainage trend has continued in the face of falling prices. Now, I do see this this Dr. Jekyll, Mr. Hyde, this split type of perspective. There's two different types of stackers. A lot of them from Wall Street Silver do or have started from the COMEX, because that's where they came from. That's what they knew. Stocks, Wall Street bets, right? GameStop. That's where they were comfortable with. So when they think about silver, they're not thinking about physical. And if you think about it, an ounce of physical silver versus spot price is completely detached. So if you were going to buy contracts on the SLV for around spot price and then turn it into physical delivery, that could be a way around or a loop in the system. Regardless, though, people are panic selling. Even the people that bought at $30 are selling, as we could see these figures leaving. And that's just so sad, because if you get into any type of investment, you have to understand how the market works, understand the value of that investment, and also look forwards where it's headed. You don't blindly invest. It has to make sense. Silver makes sense. Stock markets right now don't make sense, right? Real estate right now doesn't make sense. Crypto makes sense, But if you're looking at an investment, you're investing into it. You're investing into the potential of that. You're not just hopping on the train hoping to get rich quick. You're not just hopping aboard because everyone tells you to. You're investing into the idea, the thought of that. And silver and gold are the only things that make sense looking forwards as we talk about the dollar index or, the debt crisis, all of that. Silver makes sense. I think people are starting to realize that, but even so, people are still selling just because the price has been so bearish. The next table shows the activity by bank/holder. It shows where the large supply came from in 2020 and also where the drainage has been coming from recently. So gold, over the last month, every vault except one, Delaware, has seen gold supply drain or stay flat. Even Manfra saw 112,000 ounces drained, and they are only vault in positive territory over the last 12 months. Silver, the activity in silver has been more complex, with some vaults adding and losing. JP Morgan and Manfra lost 1.6 million ounces in the last week alone, where Delaware added 400,000. JP Morgan has lost almost 3 million ounces in the last month, which represents 1.5% of their massive war chest of silver. Now, JP Morgan, anything they do, I'm going to be skeptical. I'm going to be skeptical with anything JP Morgan does. I don't trust a single word they say. They are the shadiest bank. They are the shadiest. Jamie Dimon has been exposed doing so much with crypto and physical silver. They have done so much illegal activity, manipulating prices, price rigging. Their employees, or rather ex-employees, have been getting sent to prison, and not jail, prison. Their employees have. I've covered probably 5 different articles with 5 different instances where they were taken to court and a judge has literally sent their employees to prison for the amount of illegal price manipulation that they have been doing. It's not just JP Morgan, but they have been known to do it the biggest. Also Merrill Lynch, which is one of the more recent banks that also got some of their employees sent to prison. But yeah, it's just crazy. But regardless, that's a whole separate video. But anyways, let's look at this. So silver. Now you can see all of these. So 1 week change, 1 month change, 1 year change, and 3 year change. And then you can see this is the number of ounces on this left column, and the right is the percent. So the total is 360 million ounces of silver. 360 million ounces. And we can see down to the 3 year change, it's 54 million ounces. This is, and comparing it to, I guess, let's look the last, okay, so this is the 1 year change, negative 13 million ounces, which is 3.6%. The year before that, negative 876 million ounces. But the 3 year change is up 54 million ounces. So you do see a lot of silver coming in and coming out, a lot of wishy-washiness. And if I look at silver March 2020, when silver was $11, it was getting hammered with a freaking a shovel. People were bashing it. I was still making videos saying buy silver, buy silver, buy silver. People were just smashing silver to the ground. The last time we saw prices even somewhat, people would say, positive would probably be the July 2016 high of $21 silver. But for the last 10 years, the price of silver, the average price has been $15. Last time we even saw, I would say, quote unquote, crazy prices was in 2011 when silver was $50. So for the last decade, silver has been getting beat down. Articles, YouTube videos, everyone has kind of been hating on silver until recently once it broke above $30. So yes, you're going to see a lot of wishy-washiness. You're going to see a lot of undecided, or a lot of, I guess, people that are changing their opinions, changing their minds, their decision making. And yes, that's natural. That's normal. And that's also why we see so much volatility with silver compared to gold, because silver is a much smaller market. Now, here's a historical perspective, zooming out and looking at the inventory for gold and silver since 2016, which I was talking about, the 2016 high of $21 silver. shows the impact that this virus had on the COMEX vault. Gold almost had nothing in registered category before JP Morgan and Brinks added their London inventory with nearly 20 million ounces. Prior to this situation, this meant that almost no gold was available to move from registered into eligible. That changed quickly, but since the start of 2021, available inventory has been declining. It remains well above these levels when the situation first started. So you can see 2017 all the way to now. That is, and look at this rate. We're talking about gold, by the way, and we're talking about 40 million ounces, and that's in gold. That's not in silver. That's gold. That's gold. These are high numbers. And it is looking like the chart's going to keep going upwards, right? We're not going to see any decline. It's only going upwards. But silver is the opposite, right? You could see it starting to decline. Silver also saw an increase in registered around March 2020 when it was $11, but this has also been draining much more steadily back to the pre-situation levels. Interesting, the ratio registered to eligible is the lowest it's been since situation started, even sits below 2019 levels. So available supply for potential demand. Many critics point to the massive open interest compared to available inventory at the COMEX. As can be seen in the chart below, the ratio of open interest to available stock has fallen from over 8 to 2.76. This value is up slightly from the 2.5 seen in August, but it still gives the COMEX plenty of supply to meet physical demand over the one-third of the total open interest. The vast majority of contracts will never stand for delivery, which saying that they will never be turned into physical silver. That contract will never actually be turned into physical delivery. So coverage in silver is not nearly as strong, with 6.9 open interest ounces to each available physical supply registered. This was as low as 6.75 in July, so has been creeping up in recent weeks. What does it mean for gold and silver? While the monthly delivery of contracts certainly represents physical demand, tracking the activity in the COMEX vault shows the actual movement of metal. In a true crisis, it's very possible the vaults at the COMEX could be drained rather quickly. And I definitely see that this situation, yes, started it. It was the straw that broke the camel's back. Whatever, it started it. But it's just the beginning, because if you look at the electric vehicle model, the demand for all of that, that's not going to start getting kicked into full effect till 2022, 2023, which is the majority of what's making silver so valuable, have so much potential. It's not even happened yet. We're already seeing a silver shortage, and what the main demand factor from causing this shortage isn't even happened yet. So I think things are going to get a lot more crazy, and as the situation moves forwards, I just see a lot of chaos. But all I know is the price of silver looks like it's cheap right now. I don't see silver being $22 for too much longer, and if it is, just keep buying. But in the grand scheme of things, spot price versus the physical price is detached, so take advantage of these quote-unquote low prices, because even when silver is $50, we might have to be paying $75, $80 for an ounce. Think about it. Physical price is detached from spot price. So if we're talking about $100 silver, that might not mean spot price is $100. That might just mean how much we have to pay for an ounce of silver is $100. Things are changing. Times are changing. Right? And I just made a video talking about local coin shops being in a very tough situation because they go by spot price. So coin shops are essentially ripping off people right now because they go by spot price, but the physical price of silver is what the digital world is going by, where we buy on AppMex or JM Bullion, Provident Metals, even eBay. We're paying $30+ for an ounce of silver at $22. When silver was $25, we were paying up to $40. Coin shops don't go by that though. Coin shops go by spot price because that's it's stuck in its old ways. It's not adapting and changing with the times, which could be good, but it also could be bad for the people selling. If you take a Panda or an American Eagle to your coin shop, ask him how much he'll buy that off of you for, he's going to say a couple dollars over spot, when you could sell that coin for $15 over spot on eBay. But when it comes to buying, you could take advantage of that. But the only thing is, coin shops don't have anywhere near the type of supply or diversity that these online dealers have. So anyways, I'm going to wrap this video up here. If you thought this video was 1, educational, 2, informational, 3, at least entertaining, make sure to smash the like button. I post daily videos. I'm also doing a huge 50K giveaway. If you've been watching this video until now, if you're hearing me tell you these words right now, pat yourself on the back. You didn't click off the video within 2-3 minutes thinking you know everything or didn't need to know anything more. You stuck through and wanted to gather every single piece of information. It shows a lot about your character. It shows a lot, and I can guarantee you're going to be a very successful stacker because you are someone that wants to get all of the information. Open-minded, not closed-minded, not thinking you know everything. So yes, thank you, especially if you've tuned in this far into the video. Pat yourself on the back, literally. I'm going to wrap this video up here. Thanks for tuning in. This is Silver Slayer. I'll see you guys soon. Peace.